Hi everyone, it's Gail with Traders Help Desk, and today is Sunday, January 20th, 2019, and I wanted to go over some patterns that are developing on the higher time frames because they will have an impact on the lower time frames. So regardless of whether you're trading higher time frames or lower time frames, you want to pay attention to these patterns. Now, number one, the first thing that should really kind of stand out at you is number one, we have flipped the ATR to red. So it went from blue to red on each of these. You can see it on the ES. You can also see it over here on the Russell. Now remember, the Russell changed from the ICE index to the CME index in July of 2017, which is why this data right here is blank. Okay, but you can still read the patterns, especially on the NASDAQ and the ES. Now, the other thing that you really want to pay attention to as well is the fact that these are overextended right now on the stochastics. Each one of them is overextended. And the other thing to notice is that with this bullish bar developing, you're going to have standard divergence on the stochastics, okay? Does that mean that the market is going to go and make new highs? Not so fast, okay? You've got this ATR up here on the monthly, and that's going to act as a resistance area, and it has developed at the prior highs on just about all of these except the Russell, okay? So you need to watch out for these areas. Now, we could come back and do this number again, where it comes down and it tests the blue dot like it's doing now, and then we go on to make new highs. That is a scenario, which is why I've put these vertical lines on this chart. But if we go back and we actually look at the weekly charts, then we may see something different, okay? So I'm just going to change each one of these to a weekly, and we're going to see what the weekly is indicating. Now, the weekly has already flipped this ATR. It flipped it over here once, but now it's flipped it again, okay? So this ATR on the weekly may actually hold price back. Now, right now, you can see that we're overextended on these, okay? So that in itself is indicating that we're probably going to get a downward move, okay? Now, critical would be the ATR secondary is the red dot here, okay? So what I would anticipate on each of these is that we're probably going to come back to the ATR, possibly to the red dot, okay? And then we're going to get some downward movement. One thing to pay attention to is, does it actually come back to the ATR or does it come back to the red dot? The reason you really want to pay attention to that is because the last high was measured, oh, I can't get my thing to move. It was measured right here. So if you compare this stochastics high to this stochastics high, it's going up. But price needs to take out that prior high for it to confirm this on the stochastics. Right now, it's not doing it. You can actually see it a little bit better over on the Russell. If I connect those, then you can see that this is slightly higher on this side, and we do not have that bearish bar. If we had the bearish bar, we could actually read it, but we don't have that bearish bar yet. Now, why do you pay attention to that? Because that would be hidden divergence, and that would tell you there's going to be a momentum move to the downside, okay? And that's especially strong if, like in this case, you have this standard divergence and it's followed by the hidden divergence. Typically, that is a very, very powerful move, okay? But again, it could come back to either one of these areas, either the red dot or the ATR, okay? So if we go down to a daily chart, now this is your daily chart, and you can see I have marked the ATRs from the weekly and the monthly as well as the red dots. And you can see you have an overhead resistance here, and then you have two overhead resistance here. You have an overhead resistance here, two overhead resistance areas here. Now, that is in addition to these highs right here, so you could also put in another line there. And here, you have one here, and then you have another one here, okay? So you've got a lot of overhead resistance in this area. Now, you can also see that in this case, this little bitty pullback right here gave you that hidden divergence that I was talking about, that may occur on the weekly chart. And we had that really on each one of these. We had hidden divergence, okay? So we made higher lows but lower lows in the stochastics. Now remember, on the weekly, it's the opposite. Right now, we're making lower highs with potential to make higher highs in the stochastics, which indicates a downward move. Now, I think this week the dailies are going to actually end up overextended on each one of these. Okay? And if that occurs, then you may get what's called just standard divergence. In other words, the stochastics comes and then it's lower than the prior high. Okay, so you're making higher highs but a lower high in the stochastics. That would be standard divergence. Okay, if that occurs, then we're going to get a pullback. Now, if we get that pullback, you do need to watch these ATRs on the dailies, because that's the only areas that may potentially provide support. And you can see that it coincides with the slow moving averages here. Okay, so what we may have is that price retraces back to the ATR and then comes back and tests. This is the monthly ATR right here on each one of these. Okay, there's two potentials that's going to stop that market. One is the monthly and one is the weekly. Okay, either one of these can stop the market. Okay, and that's what I'm going to be looking at. Okay, as price comes back to this ATR, which is also coinciding with the moving averages, does price stop and does it provide support? What does the stochastics do? Because we may be overextended on the stochastics at that point. Okay, this is all future predictions. Okay, and that tells us, okay, we're going to come back up. Now remember that these values right here, they can change because it's based on the week's movement or the month's movement. So February may see a retracement. Well, I think we're going to get the retracement in January. And then in February, the retracement would be back to the ATR. And then in February, we may see price come up and either test the weekly or the monthly ATRs. Okay. But once that occurs, if we see any type of resistance, if we see any type of hidden divergence or standard divergence at that point, then we are in for a likely fall on the indices. It's got to break through these areas of resistance before it can move higher. Now, I did put those vertical lines on here because I wanted to show you the difference between what happened last time when it flipped the ATR and what currently happened. And there are different patterns. If I go back to the weekly and I've got vertical lines here, you can see that when it flipped the ATR last time, it came down, it made a low, went back and tested the ATR, came back and formed a double bottom and a micro double bottom here, and then it went on to make new highs. Also notice that you were making higher lows here. Okay, over here currently we're making lower lows. So this is a completely different pattern than what we saw last time. And these are the patterns that I actually look at when I'm trying to determine, okay, is this going to offer support or is it going to offer resistance? And you can also see that from this high to this high right here, it did not move a lot. That's indicating that, hey, it may have lost all of this momentum to the upside. So if you continue to hold these long positions and it comes back to these areas, then you may want to go ahead and tighten your stop or exit and take your profits. There's never anything wrong with taking profits. Now, I hope you enjoyed this video. I hope I didn't confuse you too much. Using multiple time frames is an advanced technique, but it is one that I think you need to start watching, because these patterns can make trading a little bit difficult for the intraday time period. But you can also, if you watch them, you can actually predict, hey, today should be a bullish day or today should be a bearish day. So it kind of gives you a bias as to whether you're going to be going long or short, depending on which intraday time period that you're trading. Now, I do hope you enjoyed the video. I hope you have a wonderful week trading, and don't forget to subscribe to my channel so you will be notified when I go live.